Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone's had a good week and is ready for options expiration Friday, which I got to tell you is not one of my favorite trading days. We've got an unusual event where there is an end to obviously a huge number of options. And we talk about this concept of max pain in options trading, and this is just a unique, much like futures rollover, right? There's an end to something and a beginning to something else, and that's going to create a bubble of psychology that it's pretty much unto itself. That being said, this is the kind of day where whatever happened up until this morning, today, Friday, the 17th, could be a very different conversation because, again, the end of the life cycle of many an option. Ultimately, it creates volatility that might go against the kind of trends and levels that we've seen so far. And that's why I consider it a caution day, because anytime things are behaving in a way that's different than quote unquote normal, managing risk becomes a challenge. Now, that's not to say there's nothing to be done in a day like today. I think there's plenty we could look at. For me, it's certainly day trading has been a little bit more challenging this week, specifically, at least for me, right? It's not been terrible, but it's not been great. Just sort of holding steady, if not a little bit of a dip. Compared to the previous 2 weeks, this is disappointing. The other 2 weeks were actually pretty profitable and upward moving, right? The kind of slope we like to see in terms of P&L. But this week is likely not going to be one of those for me on the day trading front. Okay. But we also have swing trading. And this is where I love not just being a day trader or not just being a futures trader or not just being an options trader, but actually looking for opportunity with an open mind across all of it. And because of that, today's kind of a sad day, especially for my Sector Secrets Mastery folks, because we are going to be unloading a massive winner in a week-long trade in long calls on SMH and QQQ. These are November 17 expiration that we bought previous Thursday. Obviously, if you take a look at what it's done since then, thank you, Powell. This has been a great trade, and we're looking forward to the next round. But this round is over, right? We'll be exiting these likely before noon Eastern. But that's not the end of the story, right? If day trading is lacking the follow through to really be the outperforming strategy, the outperforming time frame and time horizon, it has been for me for, most of the year. That's okay. If we have to see a little bit of a slowdown on that particular time frame and strategy, because it does seem that the swing trading, a 1 to 3 day time horizon, focusing on mainly a 1 hour or daily time frame, has been working out great. So that's ultimately what I want to keep in mind in terms of where the opportunities are. Slightly longer term, 1 hour time frame, 1 to 3 day time horizon, overnight exposure. Hence, it is a swing trade. And Google is the third swing trade we've taken profit on since really opening the door to more swings since last Thursday. So we've had 4 swings in that period of time: QQQ, SMH, Google, and Amazon. Amazon had a very strange route to the upside. It's one that with any follow through, shaking off the news that came. First, there was this, what was it, Walmart, Alibaba news. Then there was the news they're going to be going into the car space in that Carvana or CarMax kind of way. So we'll see what that net result is as we go into options expiration, but very, very tricky environment for Amazon. But my expectation for movement to the upside is really based on the structure. In an uptrend, especially on the daily, this is really a buy the dip. This is where when traders see weakness in chop, not really sure what we want to do, right? When we see weakness in a downtrend, that's just follow through from that market structure. But when we see a pullback in an uptrend, that's a whole different psychology. To me, it's much like something we want going on sale. And that's very much the thinking of buy the dip. People say, well, why does buy the dip work? Or does it even work? And I ask myself, or ask anybody, we're going into Black Friday next week. Those things that we wanted, right? Those things that are sort of in uptrends. If an uptrend is a thing we want, that being the similarity, and it goes on sale, what's the typical reaction to that? Not that I want to return the item, I want to buy it and maybe buy too much of it, right? So those are the kind of things that I think make buy the dip something far more a phenomena of trading and just more a phenomena of psychology. All right. So with all that being said, gang, as always, feel free to type in those questions. What positions are you looking at? What symbols are you looking at? What challenges might you be having at the moment? And, some of those challenges can be fixed with two very simple tweaks, tweaks that we're doing in the mastery right now. Where are you looking? What you trade, right? What we trade, what I trade is more important than how I trade it. So if I find symbols that have a better chance of follow through, whether that be momentum trading, whether that be swing trading, day trading, I'm probably going to see a better result because of the nature of that symbol. Putting on a perfectly executed fill in the blank strategy is not going to override doing it in the wrong place. What's that old saying? You can do the right thing for the wrong people. You can do the right thing for the wrong stock, for the wrong ETF, for the wrong futures contract. The first step has got to be, is this symbol worthy of our putting our capital at risk? Then we can go on to, putting on the most perfect option strategy, whatever it is that you like, in that symbol. So focus on the trends. That's something we talk a lot about in the mastery, which is prioritize the trends regardless of what time frame. If it's day trading, prioritize the uptrends. Do we have any uptrends we're inheriting this morning? Yeah, XLF, I think, is in a pre-market uptrend. Crude oil was in a pretty good looking uptrend. What else? Looks like the Dow just shook off its uptrend. Yeah, so we're not getting a lot of trends this morning, which is fine. But we're going to prioritize those trends. We're going to prioritize those symbols that are trading above their key levels. One of the most important is the previous session close. It's one of the simplest, most objective levels to look at. And previous session close is really about what is the general opinion of the current market based on where it was yesterday. So if I'm measuring whether something is up or down, is it based on where it was the first of the month, the first of the quarter, the first of the year? Yeah, maybe. But the easiest way to ask yourself whether something is bullish or bearish is just say, is it bullish or bearish compared to yesterday, right? Recency bias is a thing. All right. So first question coming up here from our YouTube. Claudia asks, in a swing, we enter on the L, PMR, DPMR, or the wave. So in a swing trade, overnight trade, if it's a trend, right? So let's take Google, for instance. That's one of our trades from this week, Claudia. If I take a look at Google, it's in a trend. When something is trending, I have more potential levels from which I can engage the market than when it's not. Right? So I could look at the low of the daily price movement range. I could look at the daily price movement itself, or I can look at a wave. I could even look at Darvis levels. So trends are going to open up more possibility for us than a non-trending environment. So yes, the whole idea here is always start with market structure and then ask ourselves, within the context of that market structure, what am I allowed to do? What triggers am I allowed to even consider? And the daily price movement range, the least of the daily price movement range, as well as the wave, which, by the way, that's how we got into Google, right? We have a trend. We get this move right in here. Draw a circle. There we go. That was where we engaged, right? Google, because we had the trend and it validated a pullback. That's a mean reversion, right? That's a mean reversion. And it was a nice representation of that right there in Google. So yeah, definitely we have more choices within the context of a trend. All right, next up, Munair is asking about IWM. Sure. Yeah, that one's one that I've been getting some steady questions on. So what I'll say is the same thing I think we talked about yesterday. If I'm going to trade something like IWM, I'm going to look at the Russell first, right? And a lot of folks say, Rog, what does the Russell track with? And a lot of folks don't know this. I think most new traders are going to think, well, the Russell moves like everything else. So for those of you that want to know how the Russell moves, this is how we do it. Really simple, time tested. This is how we do it. Russell, number one, does not move like the other three indices, NASDAQ, S&P, or Dow. Does not move like them unless there's widespread risk appetite or risk aversion. When people love all the stonks or they hate all the stonks, right? All four can move together. Otherwise, Russell is its own little thing. The next most important thing to the Russell, other than the trend itself, is the regional bank sector. Right? Regional banks are the number one weighted sector in the Russell. So when I'm looking at RTY, in an effort to ultimately trade IWM, Munair, those are two places I have to look. The futures contract, the nearly 24-hour view of what's going on in the small caps, and then the heaviest weighted sector, KRE. All right, now here's the one a lot of traders don't know. Is the Russell related to the NASDAQ? Hardly. The Russell 1000 is, but not the Russell 2000. The Russell 2000 has nothing to do with the NAS. What about the S&P, Rob? Does the Russell have anything to do with the S&P? It absolutely does not, right? S&P is much heavier weighted in tech, but its second heaviest weighted sector is financials. Well, then you ask yourself, if Russell's weighted heavily in regional banks, which index also is heavily weighted in banks? I mean, not regional, but banking. That would be the Dow. So that's a big if, there is any connection from the Russell to another index, it is the Dow. And most traders don't know this. So this is the way in which index sector stock works, especially at the sector level. And now I get an idea of whether or not IWM might be something I want to trade. So here's the challenge with IWM, RTY, KRE. Generally speaking, this thing is really still below the 200 exponential. It's the weakest of the four indices, NAS, S&P, Dow, Russell. It's the weakest of that combo. If I'm looking at what I want to do with the Russell now, and what I mentioned yesterday is, yeah, we might get some day trading opportunities in the Russell, to the upside, to the downside, to whatever side. But generally speaking, Russell has now climbed back above, right? It's doing battle with being positive on the year. This is not where we want to short the Russell. We might get some short-term windows to the downside, but got to watch KRE, got to watch XLF, got to watch the Dow. We might get some short-term movement to the downside, which makes it a great day trading symbol, but please do not commit to longer-term downside follow-through as we are doing battle with whether or not the Russell can get positive on the year. That's a whole other conversation and a huge psychological level in the Russell. And therefore, if I'm going to look for anything in the Russell, I'd rather be long, right, versus short. And then, of course, I've got to use the market structure on whatever time frame I'm going to trade. So I'll still look the Russell for the most part to the upside. And that really comes from the rally we saw on the 14th, because that was the day the Russell was able to really take out that year level. And do you see how it's hovering in that area? That's not an accident, gang. That's not an accident. So keep an eye on that. I would prefer to be overnight long, but short term, whatever presents itself. And that is the Russell. And I hope that gives you an idea of why it moves. I think a lot of traders think it leads. Wrong. I think a lot of traders think it tracks with the broader averages. Not necessarily true. And if there is an index it tracks with, it is actually the Dow. All right, moving on. Alex asks, I see the QQQ kissed the daily price movement range on the 9th, but the slow still was overbought. Am I missing something for a long entry? Alex, as far as the long entry goes on the Qs, yeah, it was a daily price movement range. We used the DPMR on that Thursday based on Powell. That was the alert we sent out on Thursday, but it was based on the hourly price movement range. So I was not looking at the daily. That was something we sent out in the mastery based on the hourly price movement range. The hour chart, the 1 hour chart on the daily price movement range. So you might say, well, Rog, what's the difference? Daily trends have daily market trend structure. 1 hour charts have 1 hour chart market trend structure. And it was the 1 hour that we were using, Alex. Yeah, we were not using the daily, although we were using the daily price movement range. Not to be confusing, 1 hour chart, daily price movement range. All right, our Amazon call still okay. Alan, I'm still in. So what I'll tell all my traders is that if you're looking at the Amazon trade, I think a lot of traders had to ditch we had a moderate trigger and a conservative trigger where 75% budget spend here. The moderate trigger at 25% budget, very small risk, about 3/4 of a point risk to the account. So very small risk. That I think a lot of our traders cut based on the gap. After 10 a.m., which is when I like to start to assess the risk I'm really dealing with in my overnight positions, after 10 a.m., things were looking far, far better. And so, yes, we're still in Amazon. And we're still in Amazon, by the way, Alan, we're still in Amazon in a way that's still very vulnerable, right? It's still very vulnerable because QQQ, SMH, obviously we're going to close those and those hit targets and those are trailing stop situations. Google hit its target. Those are now break even, maybe even trailing stop situations. So our risk is different, having reduced our position size, realize a profit, move the stop up. That is not a process I've been able to do in Amazon yet. And that's where I say it's still vulnerable. Okay. I like the trade. It's taken a wild ride based on mostly on some crazy news, but I do like the trade still. I'm still in. Forget what I like, right? As you like to say, talk the book, Rog. What do you have? QQQ, SMH, Google, Amazon, right? Talking the book tells everyone anything that they need to know about what I'm doing. All right. The SPY, Amar says SPY. So I'll look at the ES, Amar, before I trade SPY or SPX or even the micro S&P. I've got to start with the main touchstone symbol. That's ES futures for me. I don't use chart patterns, Amar. So whether or not there's a bull flag or a bear flag or a finish line flag, I don't know. I don't look at those. And certainly I'm not going to trade based on a chart pattern. That said, the question is, should we plan for a long today? Well, there's 3 things I need to think about. Direction, so looking long. Do I have the ability to look long? Yeah, I think for the most part, I can look long. Number 2, which time frame? I don't believe the daily is going to be in play. I don't think the levels are close enough. The 1 hour could be in play. Which time frame? The 1 hour could be a mean reversion to the wave. And then the 5-minute time frame could possibly be an oversold stochastic neutral environment, maybe an hourly price movement range. I might use our volatility zone, the green zone, for a buy, right? And so planning for any position is going to be a matter of looking at the directional bias, check, which time frame, check, and then which strategy. So the third level, that's strategy. So time frame, 1 hour or 5-minute directions long, and then which strategy. It depends on whether I want to be taking the trade overnight. That would lead me to a mean reversion on the 1 hour, or whether I just want it to be a today trade, which, by the way, gang, if you're playing pins, if you're playing anything that's just entered and exited today, do know that's a day trade. I know some people have a mental block about what a day trade is. If you're playing 0-dated options, that's a day trade, right? So let's just sort of normalize this lingo of most of us to some degree are day trading. We just call it something else, but pins are day trades most of the time. SPX, 0-dated options, that's a day trade. So let's ask ourselves which time frame is that going to be best executed on. And for me, that's usually going to be a 5-minute. So 5-minute day trade, hourly price movement range, 1 hour overnight exposure. Let's see if we can't get a pullback into the 34 EMA wave. All right. Alex asks QQQ. Alex, we do not build our trades in the indices on the Qs or the SPYs, the diamonds or the IWM. We look at the NASDAQ. So I'm not looking at the Qs to set up I'm not looking at QQQ to set up the Q. I'm looking at the NASDAQ futures, NQ, to set up any variation, right? So we talk a lot about this. This is not a new concept. If I'm looking at SPY, SPX, MES, I'm looking at the S&P futures, right? I'm not looking at those other 3. Everything for me is going to be built on that main touchstone symbol. By the way, this works for bonds. If I'm going to play TLT, I'm looking at ZB futures. If I'm going to play the GLD Gold ETF, I'm looking at GC futures. So That's what I want to make sure yeah, you got it? Okay, perfect, perfect, perfect. Um, Ultimately, and if for those of you wondering why, Rog, I know Alex, you've been here a while. Um, 23 hours versus 9:30 to 4. More complete. It's not a matter of right or wrong. It's really just a more complete view. All right, gang, that's a wrap. I will see you all. Today's Friday, so I'll see you all Sunday for Top Tier Outlook at 6 p.m. right here at the Simpler Trading YouTube channel or my YouTube channel at Raghee Horner. Be good to each other, gang.